Good evening, everyone. Thank you for joining us tonight. I'm delighted to welcome you to our 2025 Dental Market Review. Tonight we'll be exploring the key trends and opportunities shaping the UK dental sector, also share some insights into what we can expect in the months and year ahead. For those of you that I haven't met, I'm Chris Lekkas, Associate Director at Christie Co. I spent over 12 years supporting both buy and sell side transactions in the UK dental market. Tonight, I'll be giving a brief overview of the current dental market landscape, and I'm also joined by my colleague Jack Dewhurst, who'll be monitoring your questions throughout the session. At the end, we'll have some time to go through these and respond. So who are Christie Co? Christie Co is the UK's largest specialist in dental practice sales and valuations. We're proud to be RICS accredited, which means we uphold the highest professional standards. We act for sellers and also instructed by the banks for formal valuations. This gives us access to the largest set of dental practice sales data in the UK. This year marks our 90th anniversary as a business, and we remain committed to providing accurate, data-led advice to help our clients make informed decisions. So today, the dental market consists of over 12,000 dental practices in the UK. 65% of these are independently owned by individual dentists, with 35% of these owned by group operators and the corporates. What this highlights is that there's a very strong, active, independent sector and plenty of room for future transactional activity. We've compiled data on group-owned dental practices across the UK. The top 17 groups collectively own over 2,200 practices. The largest 5 that you can see in this list account for 71% of that ownership, each owning over 100 practices. Historically, the dental M&A market was dominated by these corporate acquisitions, particularly leading up to 2023. So let's take a look at how the market has evolved. In 2022, practice sale prices peaked. It was often seen that associate-led deals were exceeding 8.5 times multiple of EBITDA at the point of sale. It was a significant point in the history of dental practice sales. Following that, in 2023, inflation and rising interest rates led the corporates to slow down on their acquisitions and focus on their existing portfolios. Some continued to acquire, but the majority definitely slowed down, focusing on organic growth and possibly mergers where they could find within their existing groups. Now, interest rates have stabilized at around 4%, and that has improved buyer confidence. Today, and over the last 6 months, the corporates have been re-engaging. They're targeting high-revenue private-led practices, typically with over £1 million of revenue, and often with 3 to 4 plus surgeries already attached. They're always looking for opportunities for growth, and that's key when they're buying. They want to see what value they can get out of it into the future. When the corporates are looking to buy, the deal structures often include a 70 to 75% upfront on the valuation, with 25 to 30% deferred based on performance-related targets and tie-ins. A major milestone was reached in 2025, with Bridgepoint re-entering the UK dental market, acquiring a majority stake in My Dentist, who are the largest dental group in the UK, both by revenue, practice size, and amount of dentists that work in the group. This signals a reviewed corporate appetite, and it's interesting to see what this lies ahead. It's expected they will continue to successfully continue the merger strategy that was adopted by My Dentist in recent years and look to grow through further acquisition in the coming years. So who are the buyers? Interest continues across all sort of income streams, NHS, mixed and private income practices. But we have noticed in the last 6 months, there's been an uptick in demand for private practices and mixed private practices particularly. Over the last few years, there has been a slowdown in corporate acquisitions, like I mentioned, and this has opened up the door for the independent buyers. Today, around 80% of our transactions that are in the market are with independent operators. So what we see today is first-time buyers and smaller groups who are really well supported by the banks are actively exploring and expanding and leading the market. NHS activity is improving post-pandemic, but it still remains at 8.3 below pre-2020 levels. The number of practices that hold NHS contracts have declined year on year since 2020. This indicates that some of these practices have been handing back their contracts, and actually the number of wholly private practices has increased for 3 consecutive years in a row now. Wholly private practices are now sitting at 42% of the entire market. So practice values, so how are they driven? So these are driven by consumer demand, operational scope for growth, and most importantly, their profitability. Valuation multiples are often heard, but these are based on what's called an adjusted EBITDA, and it's a multiplication of this number. What is EBITDA and what is adjusted EBITDA? So EBITDA is earnings before interest, tax, depreciation, and amortization. The adjusted EBITDA removes the interest, the tax, the depreciation, and amortization from the modeling, and the adjustments essentially net out any personal or non-recurrent expenses currently by a current owner-operator or a current associate-led group by the incumbent coming owner. So over the last 12 months, associate-led purchases, we've seen an average multiple of around 7.6 times, anywhere ranging from 6 times up to 9.5 times, depending on the deal. In London and the Southeast, this area remains the highest value region, with EBITDA multiples around 7.7 times. Last year in 2024, we saw almost a 10% decline in average prices, and this was just due to smaller practice sales. However, in the first half of this year, we've seen a 3% rebound, indicating early signs of a recovery and confidence in the market. As corporate buyers return, we expect that there'll be increased competition. This will likely increase the average multiples. We've expected that deals will have tie-ins. There's going to be greater use of deferred on the transactions. And we're looking forward to seeing how that will hold for the market in the next 12 months. For the owner-occupier purchases, these are typically involve a dentist buying from a retiring owner, a previous dentist that was working in the practice and taking over their existing patient list. The average EBITDA multiples that we've seen in the last 12 months have been around 3.4 times. And again, we've seen that from a range of anywhere between 1.8 up to 5.1 times, depending on the deal. This is stable and is actually similar to what we've seen year on year over the last few years. Private practices are commanding higher multiples and actually have averaged out about 3.7 times, slightly higher. Private practices are seeing stronger valuations, and this is due to expected sustained demand from purchasers and perceived resilience in their operating models. NHS sales have remained quite active in this part of the sector, with first-time buyers and smaller group operators still looking to acquire NHS opportunities. The terms and conditions with owner-occupier purchases are often more flexible, with less requirements on deferred consideration or long-term tie-ins, as is seen in the associate side of the sector. In June this year, we surveyed over 38,000 dental professionals from across the sector. 73% of those surveyed feel either positive or neutral about the dental sector looking towards 2026. Private sector professionals are the most optimistic. So 36% of those feel really positive, compared to only 18% in mixed practices and a lower 13% in NHS-focused practices. Patient demand remains high, and actually the commentary is that it is increasing in both NHS and private practices, suggesting a continued influx in patient activity. So last year, Christie Co arranged over 550 viewings, we received over 350 offers, and we completed on over 125 practice sales. We advised, valued, or sold on over 900 dental practices in the UK. So looking ahead, here are the key trends that we see. Corporate buyers are returning, and especially for private practices. Independent operators remain dominant and lead the sector, as will the group operators that are growing their portfolios. Private practices will continue to command higher multiples. NHS practices still attract demand, but valuations are more cautious. With NHS practices, it's likely that incoming buyers, when they're reviewing the opportunity, are looking at what potential increases in costs might come down the line, whether that's increases in UDA costs to be paid to associates or increasing in personnel costs for the staff. It is anticipated that investment in digital, including AI and CRM systems, is around the corner, if not already. 86% of professionals agree that tech adoption will shape future success in dental practices. So from our survey, almost 50% of existing practice owners plan to invest in new tech or equipment over the next 12 months. Almost 50% of participants that were surveyed intend to buy or sell a practice within the next 3 years. And interestingly, 16% of associates who were surveyed have ambitions of buying or owning their own practice. A common theme and a common issue in the UK at the moment is around workforce. For the dental sector, recruitment and retention of good dentists and nurses remain top top concern, and it's especially a concern particularly in those NHS-led practices. So for more information, please visit our Christie Co website, where you can download our full 48-page dental market review. It goes into further detail on everything we've covered today and more. I think my colleague Jack will also pop a link into the chat where you can find the link to our website where you can download it. So thank you for listening. I'll now hand over to my colleague Jack, who's been monitoring your questions in the chat, and I'll do my best to answer them. Thank you very much.
Hi everyone. So yeah, as Chris mentioned, we've had some questions come in, but there's still time if anyone else would like to add any further questions, and we will do our best to answer them. So Chris, the first one that we've had come in, could you maybe elaborate on which macroeconomic factors you believe will have the greatest impact on dental practice valuations in the next 12 months?
Thanks, Jack. Yeah, look, of course, I think there's a few key points here. Interest rates stabilising, currently at 4% with the Bank of England. If they would continue to come down, that obviously gives people the ability to afford more and would increase the activity of dental practice sales. The market is very buoyant. You know, the banks are highly supportive of first-time buyers and regional operators growing their portfolios. But if interest rates do stabilise and drop further, we'll see more activity. I think another particular issue, which will be possibly felt in private practice, the cost of living pressures. You know, people are definitely feeling the pinch at the moment, and you know, it's possible that people may spend less on sort of elective private dental services, but it's yet to be seen. And look, I think the running costs of practices are increasing as inflation is increasing. Staff costs are increasing year on year. And how do practices mitigate this? By increasing fees in private practice, certainly, whereas NHS practices are a bit limited on what they can do around fees. I think these two factors will affect the landscape of the next 12 months, but it is looking positive where we sit at the moment.
Great. Another question. The report mentions a shift in buyer appetite. Are you seeing any regional differences across the UK in terms of demand?
Look, there's demand for all types of dental practice types, as I think has always been the case. It's the urban hotspots that attain the most attention. So cities, large urban conurbations, areas that it's much easier to recruit both associates and nurses. These are always the areas that will see more interest than others. But you know, there are dental practice sales up and down the country, and you know, I think you would be perturbed from a location if it's the right opportunity.
Great. Next question. Are there any emerging business models or operational trends among dental groups that you think independent practices should be aware of?
I think with any buyer in the market, whether it's an investment purchase on an associate-led basis, or whether it's an owner-occupier looking to buy a practice, the buyers of today are very savvy, and they are looking to get growth out of a purchase themselves. So they're going to want to come in and find ways that they can further develop a practice, whether that's utilizing occupancy and spare chair time, whether that's utilizing spare rooms in the practice to build additional surgeries, potential for adding additional services, referrals that might be referred out, or implants that might be referred out. They're going to look for ways that they can retain as much income in the practice and actually get a better return on their investment. That is one key thing. In terms of what's new in the sector, there are a few new dental groups who are offering partnership schemes where the traditional corporate acquisition model was you sell your practice, an element of the valuation was deferred. That deferred would then be paid either at the end of an agreed period or in installments over a period of time, and was always targeted based on performance-related targets. With these new partnership models coming into play, instead of having a traditional deferred, they are offering equity, and that means actually, by selling your practice, becoming a shareholder as part of the buying group, there's upside in a future sale of that whole group when they get arbitrage on their sale in terms of the entire group sale. So it's something that's interesting, especially for those who are interested in continuing clinically, once they've sold, and are feeling that the incoming buyer is going to support them grow the business, grow their group, and see increasing value in the future.
Amazing. Another question: what is your outlook for the dental market growth over the next 3 to 5 years, and are there any indicators you are watching closely?
We are all seeing private incomes continuing to grow. There was a significant spike in private revenues in the post-pandemic environment, which have maybe plateaued a little bit in recent years. But there are some excellent practices out there doing the right things, attaining new patients. There's no shortage of patients for the ones that are doing the right marketing and trying to attract the right type of the market. There is continued private growth. There may be a little bit of uncertainty around the NHS contracts and what that's going to look like in the coming years, but the sector does continue to grow, irrespective of economic conditions. Private practices are continuing to grow. NHS practices that are being acquired are, retaining their NHS patients, but also growing the private elements as well. So the sector is increasing. If interest rates continue to come down, then obviously practice valuation should increase, as well as competition from corporates re-entering the market.
Great. Someone just asked, how do I sell without the 3-year tie-in? Are independent buyers more likely to offer a shorter tie-in?
Yeah, absolutely. So it depends on the type of practice, but you would have seen from the presentation, sort of 80% of our current transactions are to the independent markets, or certainly to smaller group operators as well. The independent market has far more flexible terms. It's not common for 3-year tie-ins for these type of deals. It's often that an independent owner is wanting to buy the practice with a view to work in it, and effectively succession plan the existing principal, taking over their goodwill. And what is goodwill? Goodwill is often a retained list of patients, and effectively the principal of the practice themselves. In those scenarios, it's often that an ex-principal may only be required to stay on for a few months up to a year. It really depends on the deal and the location. If a group buyer, if a larger group buyer or a corporate buyer is looking at the transaction, inherently they will require an element of earn-out or tie-in, and that's ultimately how they protect the risk of their investments. It's up to who you instruct as your agent to act on your best behalf and sort of negotiate the best outcome of those decisions in the sale of your business, and that's something we can certainly help with.
Great. Do you analyze data in practices that adopt tech, AI, and CRMs to help increase valuation versus more traditional practices?
It's an interesting question. Do we analyze the data? The data sort of speaks for itself in the financial models, because the practices, it's relatively new, but the practices that are adopting AI and new workflows are often seen as higher EBITDA margins. They have got more operational efficiency, and practice values are based on demand, but ultimately the profitability of the practice. And if a practice has got a sustainable and larger margin, then it will attain a higher value at the end of the day. So that's what we see primarily through the numbers.
Perfect. And we've got one more question in the chat at the moment, but if anyone does have any further questions, we've still got time, so please do pop them in the chat. Chris, the terms purchase or sale suggests an actual full practice sale, but sometimes this isn't the case. Some transactions are partial sales or pro-contracted buy-ins, where buyers actually pay a certain percentage up front, with obviously the rest being paid in the future. Could you describe the actual nature of these structured sales and how they work out? Is it completely dependent on each sale, and what percent is paid up front?
That's an interesting question. These sales are less common in the marketplace at the moment, and it's possibly one that actually I'll take away and come back and drop you an email once I've had a think about that, if that's okay.
That's totally fine. We haven't got any other questions in the chat at the moment, so unless anyone else does have any, or if you wanted to sort of wrap us up, Chris.
No, that's fine. I'd say it was obviously a brief overview of the market. I would highly recommend that you go to the Christie Co website and download the dental market review for 2025. It's an extensive report. It goes into significantly more detail than what we've touched on today. If there are any questions or you'd like to pick up on any conversations following that, please do reach out to me or any of my colleagues. Thanks very much, Jack. I'm going to end the call now. Cheers, Sam. Bye-bye.